And the sober reality is this, and I've been talking about this for a very long time. Most Americans have no exposure whatsoever to precious metals in their retirement accounts. Even as the global monetary system grows more stressed, more derivative heavy, and prone to systemic shocks, very few are exposed to probably what's the most important asset class going forward as the currency crisis unfolds further, and that is precious metals. David Morgan of themorganreport.com. All right, so here is an article I just published actually minutes ago as I'm doing this video on LinkedIn, silver and a 401k precious metals rule change for 2026. So I'm not going to read it. I'm going to outline it pretty quickly, but it will take just a couple minutes to read this article. But beginning in, I think, February 1st, 2026, there was a rule change that basically can finally hold precious metals in the 401k plans. For decades and several decades, metal's been excluded from most employer-sponsored plans, not because of lack of merit, because fiduciaries feared regulatory risk. This has been changed, or is going to be changed. Nothing in the rules forces companies to add metals, so be aware of that. Some probably won't offer metals to their 401k participants. Some will. But for the first time, it does permit creating this situation for employers to offer to their employees. And what's interesting here is I want to take a look at how much of an impact it could, not would have. So we're dealing with what's in the 401k system, which is roughly $9 trillion that continuously grows through paycheck-driven contributions. And the sober reality is this, and I've been talking about this for a very long time. Most Americans have no exposure whatsoever to precious metals in their retirement accounts. Even as the global monetary system grows more stressed, more derivative heavy, and prone to systemic shocks, very few are exposed to probably what's the most important asset class going forward as the currency crisis unfolds further, and that is precious metals. Financial advisors, risk committees, and target date fund designers have historically kept metals at near zero levels. They're too risky. Well, the truth is, it's very risky if you're not exposed to precious metals, and that truth will come to the fore at some point. So how much money could actually move into this? And the conservative scenario is where 401k assets do garner some interest in their precious metals, so it's hard to say. And again, these are wags, guesses really, educated guesses perhaps. So in a high case scenario, you might look at something like 250 to 300 billion over time. And putting it in perspective, this is a level of gold equivalent to a year's worth of central bank buying. So it's rather significant. The level of inflow of silver could represent more than an entire year's global silver demand. That's 1 billion ounces. Now, again, that would not be the month that 401ks have the ability to put precious metals into the account. It would be probably over years, and I'm going to guess 3 or so. But still, you're looking at maybe 300 million ounces that could come into 401ks. So in other words, this change doesn't necessarily add money, it adds structure, price incentive, and systemic demand. That kind of demand did not exist until this change. So what separates us from the noise? We remind our readers that while this development is unquestionably bullish for metals over the long term, it doesn't eliminate risk, nor replace a need for direct physical ownership outside of the financial system. We still remind investors to plan sponsors that will adopt changes cautiously. Some will move quickly, others will not move at all. The rollout won't be until, I think it's January, February. And this process, of course, will take time. The real story is now out. For the first time in modern history, precious metals are on the cusp of becoming a standard building block in the retirement portfolios for millions of Americans. Not a fringe idea, not a crisis trade, not a contrarian bid. A recognized component of long-term financial prudence, and that's the truth. You need real money in an era of funny money, inundating the entire system, and in a situation where it's really being questioned across the board and will continue in that way. This is precisely the kind of transition the mortgage report has tracked for decades, slow, structural, under-the-surface shifts that eventually show up in headlines only after the smart money has possessed itself already. As always, our role is to guide investors through these changes, calmly, clearly, and with both feet planted firmly on the ground. We don't chase excitement. We analyze reality. The opportunity is significant. The risks are real, and the years ahead will reward those who understand both. So again, check out our landing page if you want to do a consultation. It's available. I'm not sure how much longer I'm going to leave that availability up there, but it is now, so you can take advantage of it. There is no obligation. We can have a one-on-one for a short period of time. You might have questions on this or something else pertaining to either retirement, precious metals, or whatever. I'll close out there. This is David Morgan with the Weekly Perspective, and I'll be back with you next week.
The U.S. government debt is about to cross $37 trillion. That's not a typo. That's trillion with a T. Tariffs are being used to try and even the playing fields. Global supply chains are shifting. Inflation isn't going away. And the value of your dollar? It's quietly being drained while no one is really talking about this. The truth is, we're living through the early stages of a financial reset, whether anyone wants to admit it or not. And if you're still relying on mainstream headlines or financial advisors who just tell you to write it out, you could be blindsided when things really shift. That's where the Morgan Report comes in. For over 25 years, David Morgan has been helping investors cut through the noise. He tracks what actually drives markets, from precious metals and mining stocks to global debt and monetary policy, and show you how to protect and grow your wealth when the system is under stress. This isn't just about gold and silver. It's about having a clear-eyed view of where things are headed and making sure you're not caught off guard. The Morgan Report gives you real research, honest analysis, and strategies you can act on, even in a world of rising debt, unstable currencies, and economic uncertainty. Go to themorganreport.com today. Download your free report. Get informed, get ahead, and take back control of your financial future. Themorganreport.com, because $37 trillion in debt won't fix itself.